Good evening or good day if you're in the Western Hemisphere, ladies and gentlemen. My name is Darius. I'm the co-founder and COO of iSTOX. I wish you a very warm welcome from the iSTOX family to you, and thank you for dialing in for today's fireside chat. The fireside chat is entitled Investment Opportunities and Trends in UK's Purpose-Built Student Accommodation or PBSA sector for 2020. And by the end of this talk, I'm sure we'll all be rolling off the acronym PBSA sector easily. Tonight's webinar is part of the iSTOX series of fireside chats that cover a wide variety of topics ranging from real estate tonight to other fascinating issues like decentralized finance, sustainability, and so much more. Tonight, we are very pleased to have four accomplished speakers sharing the stage with me to share with you on the PBSA sector in the UK. But before I introduce them, a little bit of a self-introduction about myself. Again, my name is Darius Liu. I'm the co-founder and COO of iSTOX. iSTOX is the world's first regulated issuance, custody, and trading platform for digitized securities. Now, we aim to leverage on blockchain and smart contract technology to offer private market investment opportunities that were previously inaccessible to a much wider segment of investors. We're very pleased to have with us three established speakers from CBRE. We have firstly Yeung, the director at CBRE from the Student Accommodation Valuation and Advisory team. He's currently a senior team member and provides advice to a wide variety of stakeholders in the student housing sector, and is also a lead valuer for a number of sector funds. Joining him is Kirsten Dyer. Kirsten, Associate Director of CBRE, leads the Analytics and Insight Division in the Student Accommodation Valuation and Advisory team. Last but not least, we have Riah Patel, Associate Director in the CBRE, who joined CBRE Student Accommodation Valuation Advisory team in 2019. She has experience in the commercial real estate and has undertaken instructions in UK and European student accommodation sector, and is also account valuer for IQ Student Accommodation Portfolio and GSA Ireland's portfolio. We also have with us tonight Dr. Tan. Dr. Tan Kok Heng is the CEO of Sunway RE Capital Advisors. Dr. Tan is a veteran in the real estate investment and asset management space, and has previously served as the CEO of Sime Darby Real Estate Management and concurrently the Chief Investment Officer of its property group. And before Sime Darby, he also held high-ranking positions within Colliers as well as CapitaLand. So we're very pleased to have these four very, very esteemed speakers sharing the stage with me tonight. Without further ado, I would like to hand this time over to Yeung from CBRE. Yeung, take it away, please.
Great. So just by way of a quick introduction, CBRE value in excess of £30 billion of student accommodation each year. Our regular valuation mandates are for some of the largest operators and investors in the sector, with a combined value of circa 13 billion. Today we've got Kirsten, who's going to start. She heads up our analytics offer and is going to talk about the data, the statistics, and trends in the sector. Riah is then going to talk about investment volumes and yields. And finally, I'm going to talk a bit about what's going on in the market with some of the challenges. Do you want to kick us off, Kirsten?
I will do. Thanks ever so much, Yeung. Hello, everyone. I'm Kirsten, and I lead the data and analytics function within the student accommodation team. So diving right in, as can be seen in the charts on this first slide, the higher education sector prior to COVID-19 was in the best shape of its life. The full-time student population was the highest it had ever been, at over 1.84 million students. UK students make up over 3/4 of the student population. However, demand from international students, both EU and non-EU, was also the highest it had ever been, which was recently underpinned by a new international student strategy released in 2019. Chart 2 shows the number of undergraduate applications and acceptances over time, demonstrating the system continues to be oversubscribed. This is on a backdrop of increasing tuition fees and also, most recently, a decline in the population of UK 18-year-olds, who make up the largest cohort of applicants and registered students, which can be seen in Chart 4. Despite this decline, of which we are at the very bottom of this year, prior to the anticipated growth of this cohort, the participation rate of 18-year-olds and acceptances of this group to university is the highest it has ever been, showing the appetite and demand for higher education is strong, regardless of the small pool of 18-year-olds the sector has faced in recent years. Since COVID-19 was declared a global pandemic, there has been much discussion in the public realm about what impact these circumstances that we're now living in are going to have on the higher education sector. To date, the government has put in place a series of packages designed to provide stability to the sector. We will talk about this in more detail later. Moving on to the next slide. Alongside the higher education sector, the purpose-built student accommodation sector was also in great health prior to COVID-19. The rental growth signs for 2020 were positive. As can be seen in the chart, rental growth has remained strong over the years and indeed stronger than other mainstream asset classes too. Indeed, our worst performing year in the sector was still better than retail's best performing year. Since COVID-19, we have remained in constant dialogue with operators within the sector to understand how the pandemic may have affected their bookings. When we first entered lockdown in March, most operators at this point were ahead on bookings when compared to that time last year, which was really positive news for the sector. We will go into more detail later on how bookings are looking right now. So far, I have just spoken about national trends. However, to truly understand the PBSA market and what is going on, the microdynamics of each market within the UK are integral to that. On this slide, we can see that varying levels of development activity across the major university towns has meant that each town has reached a different level of market saturation, and polarisation is beginning to happen at the micro level. This chart shows the total amount of potential demand, the lime green circle, charted against the total operational supply and development pipeline, the bar chart. Here you can see some of the markets with the largest demand pool still have a large gap in supply, despite a high number of beds, whereas others are nearing the tipping point regarding saturation. This chart shows the top 30 largest demand pools in the UK. However, there are many more markets across the country. We are also seeing polarisation on the following slide too, when it comes to student applications by type of university. Here, you can see the changes in applications by the tariff of university provider. The best are getting better, and vice versa, which was primarily driven by the lifting of the student number cap, which removed limits on how many students universities can recruit. Some students levelled up, which reduced the normal pool of students lower tier universities recruited from, and this subsequent divergence appeared. We do not expect to see this trend to be going away anytime soon. In fact, there is also an increased interest in the financial health and ranking of universities, as can also be seen in chart 9, and we expect this kind of focus to only get stronger. Universities are a complete mix of financial strength and health, with different income compositions and assets. Some are in deficit while some have a healthy surplus. The real test in a post-COVID environment will be driven by each university's student demographic mix and student recruitment strategy. I'll now hand over to Riah.
Thanks, Kirsten, and hello everyone. So looking at investment volumes, 2020 was expected to be the biggest year for student. Chart 10 shows a breakdown of investment volumes within the student accommodation sector over the past 8 years. The first key point to note is the significant rise over the past 5 years of mega portfolio deals. Major portfolio sales have grabbed the attention of investors in search of better returns than traditional sectors now offer. These investors are looking to deploy capital on big ticket deals and gain operational scale quickly, and therefore portfolio premiums are now a large feature of this market. Secondly, as you can see from the 2020 year-to-date investment volumes, we had an extremely strong start to the year with the strongest Q1 on record, which showed transaction volumes for the first quarter not far behind the total 2019 investment volume. This was underpinned by Blackstone completing the largest private real estate transaction in the UK when they acquired the IQ student accommodation platform for £4.66 billion. The landmark transaction attracted a number of really well-funded buyers, with the likes of CIC, Greystar, Mapletree and Brookfield reported to have placed credible bids. The transaction itself related to a platform sale, including the portfolio of 67 assets, providing over 28,000 bed spaces, a development pipeline of over 4,000 bed spaces, together with the business, which includes a sophisticated operating platform and over 500 staff members. The deal really shows confidence in the sector, with buyers betting that whatever happens, the global allure of an English education will endeavour. Overall, the student market was in the best shape it has ever been in pre-COVID-19, with increasing confidence and a lack of quality stock available when demand for prime assets was at an all-time high. Since COVID-19, the sector has seen transaction volumes of approximately £280 million, and Yeung will touch on these transactions shortly, but first moving on to returns and yields. Chart 11 demonstrates the favourable annualised total returns that PBSA has produced over the short, medium and long term when compared to a range of other sectors. So looking at 2019, PBSA annual total returns were at 9.4%, significantly ahead of all mainstream property at 2.9%. The strengthening of the PBSA market is further highlighted by chart 12, which shows direct let student net initial yield since 2008. You can see here that student yields are the keenest they have ever been over the past 12 years. London and super prime yields are both trending stronger, and demand for assets within these locations continues to grow, closing the gap with PRS yields, especially in London. In contrast, secondary markets are continuing to trend weaker as a result of increasing polarisation in student applications between higher and lower tariff universities, as Kirsten mentioned earlier. There has been no evidence post-COVID-19 to support a yield shift as of yet, with the exception of secondary markets, which have reduced 25 basis points over the past quarter. We anticipate that yields will remain stable until there is evidence to support a change. I'll now hand over to Yeung, who will discuss the impact of COVID-19 and other world events on the sector.
Thanks, Riah. So, for the current academic year that's just ending, 1920, the outbreak of COVID-19 meant that universities had to move all of their teaching online. As a consequence, many students vacated their accommodation, and the majority of operators made the decision to offer refunds to those students that had gone home. Looking ahead to the upcoming 2021 academic year, most universities have committed to starting on time and have stated they'll provide some sort of blended learning with a mixture of online lectures where large gatherings are not possible and face-to-face tutorials in smaller groups where social distancing can remain. Despite these challenges, the outlook for next year is quite positive, with an overall increase in applicants of 2% at the same point in the year. This is driven mainly by domestic and international students from outside the EU. And as Kirsten mentioned before, we have seen bookings for the upcoming academic year increasing, with levels only slightly behind those of previous years. Unite Students, the UK's largest operator, has stated that they're expecting to receive around 90% of their income for 2021, which is a really positive position from where they were at March when lockdown in the UK first happened. From an investment perspective, the market has also been really positive. There's a general view from investors that by 2021 and 2022, they'll see a return to normal operations when a vaccine is hopefully available. We've also seen that market uncertainty clause in the UK for PBSA lifted, and that happened at the beginning of July. So in terms of deals, Riah, if you could just flip to the next slide. As Riah mentioned before, there's approximately 280 million that is traded since March. The majority of deals have been subject to a rent guarantee for 2021. Just pointing here, you will see that the Edinburgh deal and Leicester and Leeds and Sheffield both had rental guarantees. The other two, you will note, for Exeter and Canada Water, which is in London, actually had a development lead-in period, which meant that the risk years in terms of 2020, 2021, they're not actually impacted. Overall, the deals that we have seen have suggested that yields remain stable from where they were pre-COVID, as long as there is a rent guarantee in place or there is a development lead-in period. However, the market isn't without its own challenges. In addition to contending with COVID-19, the higher education and the PBSA sectors are also having to manage some world events. Here are some of the headlines that we've been seeing. Some of them are quite sensationalist. The main ones that the sector is trying to deal with at the moment is Brexit and China-UK tensions. I'll start with the China-UK tensions first, and then we'll move on to Brexit. So every year, 120,000 Chinese students come to the UK to study at their universities. And as a consequence, the sector is quite reliant on the income that they bring. Furthermore, a significant number of these students occupy PBSA. As such, if Chinese students coming to the UK fall significantly, there could be an impact on the sector. However, recent changes in visa regulations have allowed for longer post-study stays, and consequently, Indian students have increased in terms of their applications, which could mean a drop in Chinese students could be backfilled by other groups. There is also potential issues with Brexit, with the UK government recently confirming that from the start of 2021, EU students will pay the same tuition fees as non-EU students, which is significantly higher than what they do at the moment. As a result, EU student sentiment towards studying in the UK has fallen quite dramatically, and we may see a reduction in the number of EU students going forward. However, as Kirsten mentioned at the start, this cohort of students is actually about 7% of the total full-time student population. And as such, a drop in this cohort is likely to be backfilled by others. It should be noted that for every international acceptance outside the EU, there are nearly 2 applicants from the same cohort. And domestic students are around 20% oversubscribed, as was demonstrated in one of the earlier charts. While these are obviously challenges for the sector, it would appear that fall in some cohorts could be backfilled by unmet demand from other groups, so the sector is not too concerned as it stands at the moment. We've got Riah, can you just flip to the next slide, please? So what is the outlook for PBSA going forward? 2021 is currently being seen by the market as a bit of a blip. The sector is expecting everything to return to normality by 21-22, subject to a vaccine being made available. There is also likely to be a rush in student numbers due to the increase in participation rates, and also as a result of slowing economy and more 18-year-olds in the UK. Investor demand is strong, and yields remain stable for good quality assets where the short-term risk to income is mitigated by guarantee or by a development lead-in period. The chart in blue shows that the discount to NAV for the Unite Student Accommodation Fund, one of the largest in the sector, has actually been quite small when compared with other property sectors. And we also continue to see a flight to quality, which is likely to mean a continued polarisation between the best and the worst assets in the sector, particularly when you're looking at a locational perspective, shown by one of our charts earlier. Finally, we're expecting new entrants in the market as many funds look underweight in PBSA, and PBSA offers an alternative sector with low volatility and consistent returns. So the medium-term future for student accommodation looks really positive. I think it's over to you, Dr. Tan.
Okay, thanks, Yeung. Let me try and...
Maybe before I give the stage to Dr. Tan, maybe for those of us who missed Dr. Tan's introduction by me earlier, maybe I just introduce Dr. Tan again for the benefit of those of us who joined us a little bit late. So Dr. Tan Kok Heng is the CEO of Sunway RE Capital Advisors. Many years of real estate experience across the investment and asset management functions. Before joining Sunway RE Capital Advisors, he was CEO of Sime Darby Real Estate Management and concurrently the CIO of its property group, and has held very senior positions at both Colliers as well as Capital Land. So before I hand the time over to Dr. Tan, for those of us who have questions which you'd like to pose to the panel after Dr. Tan's presentation, simply click on the Q&A button, which is represented by two speech bubbles at the bottom of your Zoom screen. And if you do not see this Q&A button, please move your cursor to the bottom of the screen and the Q&A button will display. I will then pose your questions to the panelists. All right, now I'd like to hand this time over to Dr. Tan. Dr. Tan, please.
Thanks, Dennis. Yeah, you guys can see the slides now. Yep. Okay, I think thanks Yeung and Riah and Kirsten. I think just to follow up from the market overview that they've given in regards to PBSA, what I'd like to do is just to share with the audience, in terms of Sunway's investment in the UK, in particular in the PBSA. We have actually in the last 2 years have actually spent quite a lot of time in terms of looking at real estate investment in the UK, and I'll just share them briefly, and also share with you some of the thought process with regards to briefly our investment strategy and how it in a way dovetails in with what Kirsten, Yeung and Riah just shared. Just very quickly, the Sunway Group is conglomerate. We are listed. We have 3 listed entities in Malaysia. I'm not going to go through the details, but primarily the 3 listed entities gives us a combined market cap of close to roughly about 17 billion ringgit, Malaysian dollars, and we have about close to 11,000 employees. And of course, dear to us today, we ourselves have a great affinity for the education because Sunway itself has education business. Of course, now it's very much into a foundation. We have 3 tertiary education institutions, roughly about close to 30,000 students. And in Malaysia itself, we have about close to 7,000 beds. So the PBSA market is something very close to our heart, and that's one of the other reasons why we've actually gone to the PBSA market in the UK. Through our investments in the UK, I'm going to go through the details, but primarily we have our own fund management arm, which is called Sunway Capital, and you can see just below, basically we have got 2 investments in the UK. One is into commercial, mainly regional offices, which in the last 2 years we went in late 2018, and within a year we've actually converted a private fund into a listed entity, which was listed in the Singapore Stock Exchange, the REIT, on the 6th of February. The one that is closer to our heart today is very much in terms of the student accommodation. And of course, the model is pretty similar. We've actually set up a trust, private trust at the moment, and through the fund management arm of Sunway RE Capital Advisors, we've actually invested into the PBSA market in the UK. Just very briefly, in the 2 investments we've done in the UK, of course, the first one is on the regional offices. Primarily, there were 97 offices throughout the UK. 99% of them are being leased by the UK government, totaling about 2.6 million square feet, together with our co-investors. And I think so far, it has been trading very well on the stock exchange. And I think all our co-investors are pretty happy with it. To the student accommodation, we have actually set up a trust, which is in Guernsey last year. And of course, through our partnership with the local PBSA operator, the mentioned group, we've actually invested into a total of 4 assets. At the moment, we have actually seeded the fund with 4 assets, approximately circa £60 million. You can see on the map, 2 of them are in Bristol, 1 in Sheffield, and last but not least in Manchester, totaling about close to about almost 600 beds. And has what our earlier speakers have just mentioned, I guess our focus is very much focusing more into regards to the Russell Group cities. We like to go to places where, where the so-called more reputable universities are, that's why they're under Russell Group cities. And at the same time, that's where you also have a good spectrum of not only the EU students, but you also have, besides the local students, the international students. And currently, it's been trending very well, occupancy of approximately 97%. And on average, most of these assets are primarily just under 5 years of age. And just to share with the audience, moving forward, as on the statistics shown earlier by CBRE, the take-up for the new academic year for 2020 for this seed portfolio of ours that we have now, they are doing relatively well. I think primarily, well, we have not seen the polarization yet, but I guess, being where the Russell Group cities are, I mean, there's a great demand for the students, especially from the international students. And our objective primarily is to actually grow this particular fund, which is now about 60 million. And we are now on a constant lookout for assets, good quality assets that we can actually inject into the fund as we move along. And this, although has what data has shown, probably this particular year is a slight blip, but I think based on the statistics moving forward, as for us in Sunway, we are looking very much on a long-term basis. We're fairly confident of the PBSA market moving forward. Okay, I think that's about all I have. I think, Darius, we can open to the floor for questions.
Thank you, Dr. Tan, and thank you once again to our friends from CBRE for a very insightful presentation. I certainly learned quite a little bit about the PBSA sector. I must confess that I didn't know much about it when this topic also was brought up for the webinar. The risk and return drivers for the investors among us will be something that is relevant to understand in greater detail. And we thank you for giving us some insights into the thinking behind that. So I'd just like to dive into some of the questions that we have been posed. If I could just have one moment to just pull them up. The first question to our CBRE. With COVID, many universities are offering online alternatives to classes, and many international students may opt to take online classes in their home countries or choose not to study in the UK at all. And how does that impact the industry? Will this mean much fewer students studying outside their home region and therefore translating to a less demand for student accommodation?
So what we've seen is for the current academic year, a lot of students have had their courses moved online. But the reality of what we're seeing for the next academic year, as we mentioned, is it's going to be a mixture of face-to-face seminars with online learning limited to lectures where social distancing isn't possible. So I think while we are seeing a lot of the US universities actually moving to an all online structure, that isn't so much for the UK. So we are expecting that most of our students will go back to university in September or October, subject to no other second waves or second lockdowns. So I think for us, it's much less of an issue than it is for the US sector.
Maybe I can just chip in here, Darius. I think very much in line with what Yeung has shared. I guess based on the places where we have now invested in places like Bristol, Manchester, and Sheffield, I guess all the universities there have basically been very much going on a what we call blended curriculum, online and offline. For the universities, they've basically confirmed that the new academic year will start, and they've given the dates. So I think very much is what Yeung's mentioned. I think it's a bit different from the US. I guess there's a better certainty in terms of the fact that it's going to go on blended, and also certainty in terms of when the academic year will start.
Thank you very much for that insight. Second question posed to CBRE again. Well, the topic of this seminar is the PBSA sector in the UK. But help us understand how the PBSA sector in UK compares to the PBSA sector in other popular countries for the students like the US, Australia, and so on.
So obviously, Riah mentioned the allure of an English taught education. Australia and the US also are options. The one comment I would say, particularly this is true for the US, is that the cost of an education for an international student in the US, while it looks comparatively more expensive than, say, a UK student for an international student in the UK, comparatively for the US, it is significantly more expensive than it is in the UK. So while price plays some part, not all students can afford, I think it's circa £60,000, the equivalent, whereas for the UK, it's at least half that for the tuition fees. So it's significantly less in the UK than it is in the US. And while Australia also has a high proportion of international students, some of the allure of UK education, particularly for some of the more established universities, remains quite high. That isn't to say Australia doesn't have any, but I think for many students, particularly an opportunity to study at, say, Cambridge or Oxford, can't be ignored in many places.
Thank you for that answer, Yeung. We have a question from Bernard Pang, one of our attendees. Can the panelists comment on the rental outlook? Do operators have to lower current rent for its academic year? And what rental growth do you see in the next 2 or 3 years?
So rental growth projections are always quite challenging. Our comments, I would say, for this year, and based on the valuations that we did at Q2, so about a month or so ago, is in the majority of cases, we haven't seen rents fall. There are the odd cities here and there where supply and demand has become more challenging. But that is more a case of the supply and demand trends rather than COVID impacting. In some cases, we've seen some drops in rents here and there, but broadly across the line, they've stayed pretty positive, with rental growth kind of between 2 and 3%, which is broadly in line with what we've seen long term. Looking ahead, it's always very difficult to be 100% clear as to what it's going to do. So this is very much our view of what the market could do rather than a full prediction. But we already mentioned that there is the potential for significant increase in the number of applicants going forward, especially with challenging economic climates and an increase in the number of 18-year-olds. That would suggest that if there's an increase in demand, there is the possibility of some slightly stronger rental growth in the short term. Whether that pans out the way we expect it to, we'll have to wait and see.
Well, it's asking you to gaze into your crystal ball a little bit there. It's
always quite difficult to do that.
Yeah. A question now for Dr. Tan. Well, Dr. Tan, your company, Sunway RE Capital Advisors, was established clearly with the purposes of establishing and managing a PBSA platform focusing on the UK. How does your platform work with universities? What is the engagement model? What are the various pros and cons of the various engagement model options?
Well, at the moment, I guess, for current assets, we are basically looking at, we are focusing on a direct let, instead of having what we call an arrangement, a nomination agreement with universities. I guess the fact that because these are in Russell Group cities, the direct lets the demand has been been very promising. Therefore, through an operator that we have on the ground, we've basically done on a direct led model. That means we go directly to recruit the students. However, it does not mean that we are not open to having a collaboration in terms of a nomination agreement with the universities. We do still continue to keep a close relationship with the respective universities in those cities where we are. Sometimes we even do strike out some kind of we are open to nomination agreements, especially maybe during so-called the summer vacation, etc. For whatever rooms that we may have. So currently, it's very much a direct net model, but we are not closing off the option of a nomination agreement. We are very flexible on that.
Thanks, Dr. Tan.
Yeah.
Another question for you. Obviously, we all have heard of Sunway Group in one way or another, one of Malaysia's largest conglomerates. And out of all of the various real estate sub-asset classes, Sunway clearly chose to enter into the PBSA asset class. So why did Sunway choose this particular PBSA sub-asset class compared to all the other available options?
Well, I guess when we were looking in terms of, in particular, the UK market, we were looking very much on terms of a so-called an alternative asset class form of investment. And as I mentioned earlier, as you can see from very quickly in the introduction earlier, education is something that the group is very familiar with. Because we've got our own universities, and we've got a tie-up with Monash University Australia in KL. We've got our own student accommodation. So it is a asset class that we know how to build. We know how to operate. Of course, the PBSA market in terms of the marketing may be slightly different from the UK than in Malaysia in terms of the market segment and where the students have come from. But all in all, the overall methodology was something that we are comfortable with in the business model. And we wanted to go into something whereby, from a real estate perspective, what we consider as an alternative asset class, unlike your traditional retail and hotel. So that actually is the underlying thinking behind it.
Thanks, Dr. Tan. And the related question coming from James Yeung, from one of our attendees. Given that the UK is relatively saturated with many companies acquiring PBSA assets, would Sunway Capital RE would be looking at PBSA assets outside of the UK, perhaps into Europe, for example?
At the moment, we are staying focused. Basically, I think the UK market is, to us at this point in time, it is still huge enough. I mean, you've got assets in Scotland, Wales, etc., and Ireland, not just England. So but nothing rules out. I mean, further down the road, if we see good opportunities. I know some people have gone into PBSA in Germany, etc. But at this point in time, we are still staying focused in UK, but we're not rolling out, anything outside UK. Yeah. But I guess, we've got to take it one step at a time.
Yeah, flexibility is the key here, right?
Yep.
Yeah.
Yep.
Thanks. An interesting one here for CBRE. We have all heard of this co-living, right? How does the emergence of co-living impact student accommodation? What's the outlook on that one?
So go on, Riah, because I think one of your portfolios actually has, I could see you about to answer it, one of your portfolios actually has some co-living in it. So
yeah, so I think co-living is obviously an emerging sector in the UK, and it's almost seen as the graduation between students living in student accommodation and then becoming young professionals and then living in co-living assets. I think in terms of competition between PBSA and co-living is somewhat a different product at a much higher price point, so that even though students would be able to stay in many co-living assets, it's not necessarily as attractive from a pricing, from a rent perspective. And I think in terms of student experience, students would be drawn to PBSA assets where they're living with people that are just other students like them. I'm not sure if you have anything to add to that.
No, that was great.
Yeah, I think maybe just I think you're right. I mean, for the co-living, definitely in terms of the rental cost will be much higher than a PBSA. And I guess as a student, I mean, from our perspective as an operator of PBSA, I think student accommodation will give the student, I mean, the kind of community that one wants, because in the co-living, you may have some working adults and all that. So it's not the kind of student environment and student community that you actually want as a student at a point in time. Yeah.
Yeah, it's a different type of community that attracts different demographics of people, I think.
Interesting perspective. Thank you very much from all the panelists. A question a little bit more towards the crystal ball gazing again. We CBRE, you guys mentioned the trends among the Chinese and Hong Kong students and non-EU students studying the UK. A broader sort of global macro trend would be one of deglobalization, right? So how would this then translate into structural pressures and maybe opportunities in the PBSA sector going forward?
So I think we've mentioned quite a few times the allure of an English taught education, and that doesn't seem to be going away anytime soon. I think there will always be students who want to come to the UK. We have one of the most established higher education sectors in the world. And the other thing that we have to touch back on again is the growth in UK students as well. Looking ahead, the chart that we put up before shows that despite the number of 18-year-olds who actually make up quite a high proportion of new students entering their first year going down, the number of students entering the system has increased, and that's a result of increasing participation. So even if that participation stays flat, and if this year is anything to go by, that isn't the case, it's gone up. Even if that participation rate goes flat, the number of 18-year-olds when you look ahead is increasing quite rapidly. So even if there is a drop in the number of international students, the number of UK students is going to increase. I think coupled with the fact that not all PBSA is, as Riah's already mentioned, is not directly comparable with the likes of co-living where everything is very shiny. There is a big mix of accommodation offered by the sector. That UK student cohort is going to look towards PBSA more and more, and they're going to look for value for money, which many operators are actually well placed to do.
So would you say that the demographics in the UK sort of would constitute a tailwind for the sector, at least for the short to medium term?
The demographics look really strong. And I think Kirsten knows the data better than anyone. And I think she's about to tell us something.
I think just to reinforce Yeung's point about the UK 18-year-old population is that we are at the trough of the number of 18-year-olds in the UK. And we've got two things going on here. Not only is participation continuing to increase, but that population of 18-year-olds is set to increase as well. So we've got kind of two positive trends. That means that the number of 18-year-olds that are likely going to want to go to study in the UK is set to increase. So that will either offset any potential drop in international students from a numbers perspective, or it could actually increase the pressure on demand for places, which may mean that universities might consider expanding.
Looks like the PBSA is maybe more resilient than I originally thought. A question from James Yeung, one of our attendees, to Dr. Tan. Would Sunway RE Capital be looking to develop PBSA assets rather than acquiring ready-built assets as part of the strategy? Dr. Tan?
I think if you can see from the initial introduction, the idea of the trust structure that we form was primarily meant to acquire what we call income-producing assets in the immediate term. Building PBSA for the immediate term is unlikely because our objective is to actually acquire income-producing assets, of course, with an attractive yield. But however, moving forward, once we hit a certain, what I call asset under management, a certain base, we are open to building or even forward funding. But right in the immediate future, it's very much more for income producing. That's the strategy.
Now, friends in CBRE, do you see a trend more towards development of PBSA assets rather than acquiring income-generating assets already from the investment perspective?
I think it depends very much on what your fund is looking to do. We do see some funds that will mainly look at built assets, and we have some funds that will mainly target forward funding assets. I think we mentioned some of those before with you, Dr. Tan. What we're generally seeing, though, is that as opportunities are, there are less and less opportunities in the sector because PBSA is quite location driven. It's not like offices where you can kind of build it somewhere in the city centre and it works. You need to be close to the university or close to the city centre, close to transport links. They're quite locationally sensitive. So when opportunities aren't there, we are seeing the bigger operators and investors actually turning their hand to development in order to be able to build their portfolios out. But it depends very much on your risk appetite and what your returns are. So obviously there'll be some investors who decide that investment isn't for them.
Thanks, Yeung. Here's another one for your team. Is investor demand for student village-based accommodation, such as Vita in York, as high as standalone buildings?
So Vita is quite a specific model. Vita run a significantly higher service level than the majority of the market do. So a lot of the demand associated with Vita is particularly from international students or domestic students with significant wealth. Their rents are quite high, but the service level associated with is they come with personal trainers, there's cleaning that's included in their rent. I think they serve breakfast most mornings free of charge. So the appeal of Vita is to a quite specific targeted market. And the Vita team themselves will hold their hands up and say they're targeting a specific international student with a certain amount of net wealth. So I don't think it's necessarily the whether it's a village or a standalone asset. The appeal of Vita is specifically their model, and they are targeting a specific type of student and a specific demographic.
Hearing you describe Vita, it makes me want to take a little holiday and stay there for a while.
Their schemes are very, very nice looking. They, I think the comment that most of our team have had, including myself, is when they get there, I think this is nicer than my house.
Certainly sounds nicer than mine.
Those are for the pampered students, Darius. Yeah, extremely pampered.
Yeah. Dr. Tan, one for you from the floor. Compared to other industry players, and of course there are many in this space, what is Sunway Capital RE's competitive advantage? What is Sunway's pipeline for new student accommodation project?
I think as what I indicated earlier, I mean, to us, when we looked at this investment in this asset class, we felt that the major competitive advantage we have, or rather we have, is because we have ourselves invested in this asset class in Malaysia, in KL, and we've also, like I said, it's not only the student accommodation, but we've actually built universities, we've run universities, so we kind of understand how the university and student operator, the kind of symbiosis and the relationship Of course, what we did was we took this particular so-called domain knowledge, and then we tried to do it of course in UK at this point in time. So to us, we felt that this was the specific competitive advantage we have. And without going through the details, I mean, this particular asset class is relatively operational. I mean, we've always, among ourselves, we tell ourselves every particular student is actually one tenant, So if you have 7,000 beds, you've got 7,000 tenancies to deal with, and that's quite a lot in terms of operations. So, but we are confident and we're comfortable with it because we have done it. So to us, that's actually our main competitive advantage and strength.
Thank you for that insight, Dr. Tan. I'd like to ask the panelists from CBRE the question from an anonymous attendee from the floor. Given that PBSA and multifamily have competing land use, can we ask the panelists from CBRE on the yield spreads between PBSA and multifamily? Is the spread between these two asset classes diverging or narrowing in recent years?
I don't know, actually. I think I'd have to go and have a look. Any ideas, team?
So I think London PRS yields are, the best in class benchmark is at 3.75% at the moment. And we are seeing a closing the gap between best in class direct let student yields in central London with PRS yields.
I think we'd have to go back to that one for the detail on it, because I think it changes significantly depending on where you are in the country, because obviously London land uses, there are lots of things to go at, whereas in some of the regional cities, multifamily is unlikely to work in a arguably more secondary city, but a secondary city may have a strong university, which means that PBSA can work better than multifamily in some of those places. So it's very much location dependent.
So strong local knowledge would be important when assessing these.
Very much so.
Yeah, I would imagine so. Yeah. Dr. Tan, you mentioned Sunway's one of the competitive advantages is operational strength. If I was an investor and I was looking at different investment opportunities with different operators, how should I go about assessing the strengths of these operators? What should I look out for in different operators to determine the good from the bad?
Well, I mean, for us, when we were looking at getting a local operator, there were primarily two areas that I won't say of concern, but the two areas that we were looking into particular was very much the ability to recruit the international students. I mean, that means they must be able to, in terms of the leasing of the beds, that was one critical factor for us, and that actually would mean also the ability in terms of their relationship with some of the universities should we not go on a direct let model, and that we want to have a nomination agreement. That means how good is your relationship with the universities in that particular city. The other one, of course, is very much in terms of the internal operational capabilities, not so much on the day-to-day maintenance of the facility, but also because for us, from investment standpoint, we're looking at, if we want to sort of refurbish, assuming we bought an older PBSA, maybe we want to do some refurbishment, trying to maybe, if there's opportunities for what we call, in our industry, the asset enhancement to maybe increase the number of beds if it's possible. So the project management capabilities, comes in because, that will also tie in, with the ability to know, especially, the planning guidelines. I think my friends in CBRE will know it's also quite pretty tedious in terms of the local planning guidelines, and you need to go through the planning approvals and all that. So somebody who's had that project management skill sets, because we are here for the long run, so we are always looking at ways to enhance or upgrade the facility. So these are the two major factors that we were looking for in terms of an operator.
Thank you, Dr. Tan. I am mindful of time. Doesn't time fly when you're engaging in such a fascinating discussion? We have time maybe just for about 2 more questions, so I should just post them right here. Maybe one for maybe CBRE or Dr. Tan, you may just want to chime in. Private sector en-suite accommodation. I've seen some stats that they are generally more expensive than the university equivalent, i.e. university en-suite accommodation. Is there any reason why students will prefer the private sector option?
So university, the amount of en-suite accommodation from universities is actually relatively limited. The data is slightly skewed by the fact that in a lot of cases, the university operated bed spaces actually turn out to be private bed spaces where there is a nominations or some sort of lease with a private operator. The other thing that you have to remember from the perspective of the university accommodation is that most universities will only offer accommodation to first-year students, with the exception of a couple of collegiate universities. Most universities only have enough accommodation for their first years anyway, whether that's their own accommodation or whether that's accommodation that they are doing through a partner by way of a nominations. So if a student would like an ensuite room, and we are seeing more of a trend towards PBSA for the reasons that they typically tend to be more attractive to students from a security perspective, from a locational perspective than many of the private houses that are offered. If a student wants to live in some sort of purpose-built bed, they have to go to the private sector after their first year because the university just doesn't have enough bed spaces to accommodate them.
I'd also add the age of the stock to that point as well, is that typically university residential stock is a lot older. The universities have both an academic and a residential estate that they need to do constant refurbishments to. So the quality of university stock is usually a bit lower than what you would find in the private student accommodation, direct let style accommodation. So students typically want the amenities and services that the private sector can offer them, and this is reflected in the price differential between university and private accommodation.
Yeah. And what we found actually is that many of the universities, particularly in the last 10 years, because there has been a private offering and because there is an opportunity to partner with operators and investors, they've chosen actively to not invest into their own accommodation as much as they would historically, because there are better options for their students out there, and they can leverage the relationships that they have with private sector providers to provide good quality accommodation without having to throw their own money, which they would rather invest into their academic space.
Great, and we're just coming up to the hour, and I have one last question for all of us. If you had some spare money to invest in the PBSA sector, which region or which university even would you put your money in? This is your own money, by the way. How the yields compare between different universities, different countries. It doesn't have to be in the UK. If I had given you a pool of money for PBSA, where would you put it?
I think we should probably bring up the chart again that Kirsten had at the beginning, and look at the places where the circle at the top, which is the total amount of demand, and then the bars where there is the supply of bed spaces. Probably where there's the biggest gap. If there's decent opportunities out there, then those are probably the places we would be going for. Unfortunately, those places inevitably are, there is a gap and there is a reason for that, whether they are challenges to planning or whether they're historic cities that are very difficult to actually find sites in. But what we have found generally is those cities are the ones that perform very well with strong rental growth. And the barriers to entry mean that there is likely to be a lack of competition for you going forward.
Dr. Tan, how about you?
Yeah, I think Yeung has hit the nail in the sense that for us, one of the first few indicators we look for is basically the demand. That means the number of international students, and versus the supply, and the supply also includes potential supply, I mean those with development or planning approval, and then you can see in terms of what's the percentage of the demand is being catered or not catered for, and of course then we look at who the competitors are. So I mean, yeah, that's very similar to what we will look at as well, because therefore we know that at least in terms of the kind of rental rates that we can forecast moving forward, and of course, hopefully we can forecast 2.5-3% increase per annum or whatever it is, that it can be done with a much more greater confidence level because we know that demand will be there. And I think as what CBRE has mentioned, I think one of the major factors in terms of the local demand is of course the increase of the 18-year-olds. And of course, I don't know, I mean, with this current economic situation, we may even have people, going back to do for further studies. There could even be a slight growth in the postgraduates. That could be a potential as well moving forward.
Great. Thank you very much to all our panelists, Yeung, Kirsten, Riah, and Dr. Tan for a wonderful and fascinating session. I'm sure you will agree with me that we all learned a little bit more about the PBSA sector, the risk and return drivers, as well as what to look out for if we were able to deploy some of our capital to invest in this interesting and resilient sector, as I've learned. So thank you very much to all attendees for joining us in this iSTOX webinar series tonight. A very good evening to all of us in Singapore, and a good day ahead for everyone in the Western Hemisphere. Do join us, stay tuned for upcoming webinars on a variety of topics, as I mentioned, and I look forward to seeing you at our next fireside chat. On that note, I wish you all a very pleasant day ahead. Thank you very much.
Thank you.
Good night.
Good night.
Thank you.
Thank you.
Thank you.